Jim Mallory with UB Technologies, and I think you guys are going to get a lot out of the presentation today. We're going to give you some tips and tricks and things that you can do with minimal effort to really significantly improve your accounts receivable. And then we're going to look at some ways that you could even take that a step forward through some automation to really put your AR collections and credit management process on autopilot. So without further ado, we're going to dig right into the presentation today. So how important is your accounts receivable? Accounts receivable for most companies is either their largest asset or their second largest asset. And your ability to convert your AR to cash faster will have dramatic improvements on your bottom line and access to cash through increased cash flow. Late payments. You know, times get tough and our customers take a little longer to pay. Some of the recent studies we've seen, this one again is just a couple years ago, about 39% of American invoices were paid late, and that's quite frankly unacceptable. You're a business, not a bank. You're extending terms to your customers. You're providing quality products and services, and they should be paying you on time based on their credit terms. DSO for many of you on the phone is going to be a familiar term. For some of you, it may not be. But days sales outstanding is probably the key metric you want to look at to kind of figure out how effective you are in your accounts receivable collections. And what it basically does is it tells you how long your customers on average are taking to pay you. And here's some pretty interesting stats. So industry research, this is from a Tradius, or a credit monitoring organization, have found that average day sales outstanding in the U.S. was about 61 days. But conversely, those customers were offering on average 28-day credit terms. So you may have 28, 30-day credit terms, but it's typically taking most businesses twice as long to collect on that amount of money. So again, a lot of room for improvement there. Here's another one. 52% of U.S. respondents reported the customers had asked for extended payment terms over the last 6 months. Again, this goes back 2 years, but I can't imagine that things have changed dramatically. And how do you know? Are your customers taking longer to pay? Same study, 48% of U.S. respondents to the survey reported that customers had delayed payment without prior agreement. You know, when you're offering customers net 30 terms, you expect to be paid net 30. If it was net 60, you'd offer them net 60. And then let's look at the impact of this on your business. So we all know the longer an invoice goes unpaid, the less likely it is that you'll ever be paid on that invoice. Well, here's some statistics. If your invoices are over 3 months old, there's a 26% chance that they are not collectible. If they go over 6 months, 70% of those are not collectible. And if they go over a year, you only have a 10% chance of collecting on that money. So it's very important to have policies and procedures set up so that you can be very proactive about collecting earlier on, and then have a policy where you send your accounts to third-party collections, you know, especially right around that 6-month period, right, if not beforehand. So let's look at the business case here and what's going to be valuable to you as a business owner, to you as a controller or a CFO or a credit manager. On average, businesses write off about 4% of accounts receivable. Now, what does that mean? For a $10 million company, that's $400,000 a year they're writing off in bad debt. If you're a $1 million company, that's $40,000 you're writing off. And that's not insignificant. Through automating and having some procedures around your accounts receivable, again, your largest or second largest asset in your business, just a 10% improvement is going to save you $40,000 if you're a $10 million company, or $4,000 a year if you're a $1 million company. And in some industries, those write-offs can be a lot more than 4%. That could be as high as 9% or more. Okay? Now, there's been a lot of studies out there. There's an organization called PayStream Advisors, and they focus on accounts payable and accounts receivable. And they say it better than I can. You know, there's a lot of great accounting systems on the market, whether it's QuickBooks and Peachtree at the low end or Sage 50 US, on up into the Microsoft and Sage products in the mid-market. But most of them don't have a great solution for managing credit and collections. And that's exactly why we developed Anytime Collect. So, you know, one of the questions I always ask companies is, who handles your collections? And I want to make a point here. We talk to companies all the time, and they say, you know what, we don't have an accounts receivable problem. We have a handle on it. And then I dig in a little further, and I say, all right, well, what's your day sales outstanding? And they probably don't know, but if you ask them, all right, roughly, how long does it take your customers to pay you? They're going to say, yeah, probably 40, 50, maybe 60 days on average. And I say, what are your terms with your customers? Oh, net 15, net 30. I'm like, well, you see the problem here, right? You're offering terms, and it's taking them a lot longer to pay you. So my question then is, who handles collections? Who has that responsibility within your organization to manage your number one asset, your accounts receivable? And these are the answers I get. You know, it's an office manager, and they're part-time, and they're kind of untrained. Or maybe I've got a part-time bookkeeper or AR clerk, and they're really good at getting the invoices out, but they're not very good at collecting. It's not something they're comfortable with, right? They don't have a workflow. They don't have a procedure. They don't have great phone skills. Or in other organizations, it's actually the CFO or the controller, and these are pretty important positions in your organization. Do you really want the CFO or the controller making those collection calls when it could be something that others in your organization could do? And then the other answer I get once in a while is, well, I don't have anybody. I don't have an AR problem. And then I say, well, what happens when the customers don't pay you? You know what the answer is? We send them to third-party collections. And if you've ever done that, you know that you're going to be giving up about 40 to 50% of that amount that you're sending to third-party collections. Most companies don't make 40 to 50% when they're selling the products or services. So you're basically giving away your products, and even worse, you're probably losing money on that sale because you had to send them to third-party collections. So again, I just wanted to point out you know, why this is such an important area for a business to focus on. So, you know, the next question then I ask companies is, all right, if you have a process, what is your process? And the number one answer for companies is, all right, well, I print out my aging report, I grab my highlighter, I pick up the phone, I may have to dial into another system or log into another system to get the contact information. Then I start dialing for dollars, right? And I probably print out my aging report in alphabetical order. So I start with Aztec, go to Baytech, I go to Chamomile, I go all the way down the list, A to Z. Now most of the time I never make it to Z. So if you're Zebra Enterprises, you never get a phone call for me for collections. The second one is kind of a humorous one, right? Calling a favor from your brother-in-law, Frank. Nobody really does that, but you want to. This is one that I see all the time. You wait until you can't make payroll or you want to make a big purchase, and you say, all right, well, we need to start going after the AR that's been sitting out there, so start dialing for dollars there. Again, some people just wait until they're over 60 days or 90 days and send them to third-party collections where they lose their shirt on the opportunity in the sale. And then the last one is just put them on credit hold and hope that they need something from you in the future, in which case then they'll have to pay to get off credit hold. So there's a lot of different ways that people are handling it today, and none of them are ideal. So let's talk a little bit about some things that you can do today to reduce your accounts receivable. And it all starts with our number one point here, and that's to develop a plan. And there's a couple ways to do this. The first is to do some research. Set some goals and metrics. You have to understand where you're coming from. What are your day sales outstanding today? What are your average credit terms? Who are your top customers? Who are your top customer offenders? How much did you write off last year in bad debt? You have a problem with disputes. What areas of disputes do you have problems with? Is it the wrong billing rate? Is it the wrong freight rate, damaged goods? So you just need to get a lot of this research in place first to understand where you're at today. Some ways that you can do that, survey your employees. You know, who's responsible for selling to the customer. They'll probably have some input into ways that you can improve the process. Talk to the people in your organization that are responsible for credit and collections. You know, talk to your customers. Ask them, you know, why aren't you paying on your invoices? And they'll tell you, you know, you don't get me the invoice on time. Or whenever I get the invoice on time, it's incorrect because I require the purchase order number to be on it so I can trace it back. And then the other one here is to do some industry benchmarking. There's an organization called the Credit Research Foundation, and if you contact them, they have a report that they publish, and you can actually subscribe to it for a very small fee, and they'll identify your industry, so whether you're in construction, mining, retail, distribution, manufacturing, what have you, and they will benchmark your AR, your day sales outstanding, against your peers in your industry, and that way you can get a feel for how well you're doing. They'll even do it by the company size, so whether you're a small distributor or a large distributor, you can see where you fall on that, okay? And once you got the research, then you really just need a plan, right? So most companies, especially the small companies, don't have a formalized plan. What do I do when I have an invoice or multiple invoices coming due for a customer? You know, maybe it's 3 days from the invoice due date, and I have yet to receive a payment. Most companies don't do anything. Why not send a reminder out, right? We get them as consumers. You don't pay your electric bill or a medical bill. You get a reminder. You know, you have an invoice that's coming due. We haven't received payment. Please remit payment to avoid any disruption in service. We value your business. If you're experiencing problems, please contact us, et cetera, right? If payment's been made, please disregard. So we can actually start even before the invoice is due. Well, what do we do the day that the invoice is due and we still haven't received payment, right, and it's going to be past due? Do we send them another reminder? Do we schedule a call for somebody to call them and find out what the problem is? Again, we don't want to get too late in the sales cycle because then the invoice becomes uncollectible. You know, we want to define some procedures here. We want to define some workflow. You know, maybe the procedure is first email, second email, and then at 10 days past due, the collector calls. 15 days past due, we send another email that's a little more threatening. At 20 days past due, we schedule another attempt for the collector. And at 30 or 60 or whatever it happens to be past due, then we send them a notice that we're sending them to third-party collections or terminating their account. Right? So we need some sort of a policy and procedure, and that will vary depending on your business, your industry, your customers. Okay? That policy and procedure may also vary depending on the nature of your customers. And our application with Anytime Collect allows you to define a set of procedures maybe for your industrial customers that's different than your government customers or different than your commercial customers or your retail customers. The other thing then is to have some approval workflow in place. So, you know, if I've got an issue and I'm the AR clerk or the part-time office manager and I need to get something done, who do I go to internally to get an approval? You know, they want to set up a payment plan. They want to place an order even though they're already over their credit limit. So you just need to define those in your policy document. And then clearly define who's responsible for what. Again, AR is your #1 asset in your organization. If this was a piece of capital equipment, a large piece of machinery, if it was a building, you're going to maintain that, right? You're going to take care of that asset. With accounts receivable, it's no different. You need to maintain it. You need to have somebody responsible for making sure that it doesn't get all rusty and old. So define the roles, who's responsible for the collections calls, maybe it's a team of people, and who's responsible from an executive standpoint, whether it's the CFO, the controller, or if you're a little larger, maybe a credit manager or supervisor. Number 2, provide timely and accurate information. The #1 reason study after study shows us that customers don't pay on time is because they didn't get the invoice on time. In most cases, your customers want to pay you. We used to have this problem, and it was a shame on us. We would provide a product or service to a customer, and it would take us 2 or 3 weeks to actually get the invoice out to them. We had net 30 terms from the invoice creation date, They get it, a week before it's due. It has to go through an internal process, and they were constantly paying us, 10, 20, 30 days late. So if you can simply get the invoices to your customers faster, you're going to get paid faster. The second one is the accurate side of this. Make sure you understand why your customers aren't paying you. Maybe it's because they require the purchase order on the invoice. Maybe it's because you keep taxing the product or service and they're tax exempt. So that you need to understand what the problems are to avoid those reasons for non-payment. Okay? Our invoices in dispute, why are they in dispute? Are you tracking it from a reason code? So you can understand areas that you need to improve internally. And then, timely and accurate information. You need this at your fingertips when you're making your collection calls. You need to know who is my contact at that organization without having to go look it up in 3 systems. What's their phone number? What's their email? What other invoices are out there I need to talk to them about? What payments or credits do they have on account? What are my recent call notes for that customer? Did I send them an email and it bounced back as undeliverable? So all of this information needs to be centralized in one location and available at your fingertips. Key performance indicators is the one thing that you need to do to identify whether you're getting any value out of putting together a plan and some procedures. So our software, what I love about it and what our customers love about it is they can take a snapshot before they implement, find out what is my days sales outstanding, what is my average days to pay for my customers, what are my total amounts in dispute today. Take a snapshot of that, use the software for 2 or 3 months, and come back to it and see if I've moved the needle. Have I taken my days sales outstanding from 60 down to 50? What are my goals to get DSO down from 50 to 40? And then I can put some policies and maybe some programs around that to see if I can move that needle even more. Okay? I might even be able to get some insight here and find out that my customers are paying me late on the small invoices, right? Maybe it's a $5 or $10 invoice, but they're paying me quick on the large ones, and the reason for it is because I'm not calling on the small invoices. I'm only calling on the large ones. So then you can put some policies and procedures around improving, collections around invoices of a certain dollar amount. Right? So it's just giving you some ideas on areas you can really make some major impacts. Some possible KPIs. One of the things we've got in the software is cost to credit. We're going to talk about that a little more. Your cash to forecast accuracy. Can I forecast when I'm actually going to get paid? Obviously, the sales to invoice delivery time, putting some KPIs together to measure improvements there. Reducing the amount that's in dispute and reducing my average days to pay. Defining roles and responsibilities, as we talked about this a little bit with the plans. So the critical questions in the organization are who can put a customer on credit hold? Who can change, increase, decrease credit limits or credit terms? Who's responsible for making the collection call? And how do your teammates collaborate? If you have more than one person that has different areas of responsibility here. Some suggestions and some things we can do within our software. One is to clearly define those roles and responsibilities so I can set up my CFO as a user in the system. And I could say that, I have a part-time AR clerk and they report to them and they're the primary person responsible for my collection calls. But I might have an office manager or secretary that's in a couple hours a week that has some bandwidth. You know what, I can set them up and I can have them responsible for sending out reminders. So you can divide and conquer there. The other suggestions, assign your accounts to collection reps so you know which collection reps are responsible for which accounts, and clearly define roles for those employees. If you have a DSO of 60 and you go to your collection rep and say, hey, your goal for the year is to get that down to 50, then they know what they need to do. You can give some authority to them. Maybe you want to stiff them or perk them on that, if they hit their goal. Standardized messaging and processes, this is huge. I, in a previous life, I'm still in sales, but I was in a smaller business. It was our business when we were growing, and I would go sell something. It would get invoiced, and we didn't have somebody focusing on collections. So I would sell it, it would sit out there, and then 30 days later, our CFO would come to me and say, hey, Jim, you sold this. We never got paid. You need to go collect on it. And I would have to do the collections, and I would type the email up, right? We have all done it. I sold you this product or service. We haven't received payment. Will you please remit payment? Send. I go to my next one. Type in almost exactly the same email, different contact, send. Again, another one, another one, another one, another one. So why not automate this process? Let's standardize dunning letters, collection letters, statements, past due notices, reminders. Let's standardize this from a corporate standpoint. This is even more important because at one point we have 2 people in the organization that were doing collections. One that was sort of like the proverbial Nazi, and we had some customer complaints because they were being a little too forceful on collections. And we had another person that was a little too easy on the customer and almost more forgiving in their tone. And so by standardizing this from a corporate perspective, everybody has the same message. This is our policy. We sold it to you. You're past due. We're sorry, but if we don't receive payment by this date, then your account will be put on hold. So that from a corporate standpoint, I think makes a whole lot of sense. Okay, and we can obviously do a lot of that within Anytime Collect. And this is just one of the canned reports we provide, and obviously a lot of these can be tailored to your organization. Documenting your activities, right? So we're a tech company, and before we developed Anytime Collect, our process, this was our process. Print out the aging report, grab the highlighter, pick up the phone, and then we were really technical. We had a Word document. We stored it out on the network, and we would go in and we'd put in our collection notes so that when the CEO or the controller wanted to see what was going on with collections, they could go review that in Word. Wow, that was really high tech, right? We're a software company. But it is important to be able to document what's taken place. What if I happen to make that note, but I leave the company or I'm out of the office on vacation? Somebody else needs to be able to access that information. So we give you the ability to do that within Anytime Collect to say, all right, I called these people, this is what I talked about, or I left a voicemail, this is what I left a voicemail about. I sent the email. So documenting all of that in one place so that it's available for anybody that wants to see it. I don't have to worry about going out to another system to see the original invoice. I don't have to go out to another system, to my accounting system, to be able to see which invoices are coming due. I don't have to run the aging report from my system. Everything is centralized in one area for me at my fingertips. Disputes. Disputes happen if you extend terms to customers. It's inevitable, but there are ways to improve your process in managing a dispute and to get that dispute resolved faster. Okay, why is the dispute going to occur? Send them the wrong product, bill them the wrong rate, charge them tax, they're tax exempt, product was damaged, they're working through an RMA with you. There's various reasons why you're going to have a dispute. The key to managing a dispute is to identify there's a dispute in the first place. Your customers, if you've charged them the wrong rate, they're not going to call you and tell you that. They're going to wait until you call them and say, hey, why haven't you paid? Well, you charged me the wrong rate on that, so I didn't pay. I was waiting for you to send me an updated invoice. So if you have a process in place to catch those, right, so I'm going to send the reminder. I'm going to then make a phone call after 5 days or 10 days. I'll find out that invoice is in dispute. I can then go back to my management team or the sales guy or accounting and make that change, get you the correct invoice, resolve that dispute, and get paid faster. Because again, if we wait too long, it will become uncollectible. Okay? Centralizing your data and communications. We talked about this before. In our example, we had our aging report in our accounting system, we had our contacts in our CRM system, and we had our notes in a Word document. And, oh, by the way, we had our emails in and out to the customer in our personal Exchange inboxes. That's really not conducive to effective AR credit and collections processing. What we really want is everything in one place available at our fingertips. You can think of it as terms of contact management or CRM, but specifically for your AR collections. What do I want to see? I want to see any account notes. I want to see disputes, recent payments, invoices, statements, sales orders, phone calls, activities that have been scheduled for them, email in and out, expected payments that they told me they're going to send, and all of my supporting documents need to be there, my invoices, contracts, pictures of damaged goods if they're disputing. So there's a lot of different things I need to be able to centralize and access. Resources. All right, so this is a big one. If you have even a small organization, you can manage your resources more effectively. Again, my AR clerk, or if I'm big enough, I can have actually somebody that's even part-time on collections. I'm going to assign them to my top accounts. I'm then going to use the built-in schedules and the built-in workflow and alerting within the software to be able to tell them what they need to do. The one thing that some companies try to do is they try to use a system like ACT or a CRM application to document what they've done in collections. And that's good, but it doesn't tell you what you need to do. And that's where a system like Anytime Collect really shines, is it will build the workflow and say, all right, you have these invoices that are coming due in the next 3 days, send them a reminder. You then send a reminder, you close it. The payment hasn't been received 2 days after the invoice is due. It creates an activity for the collector and tells them, hey, send them a past due notice. They complete that. Then at 10 days past due, it says, hey, you still haven't received payment on these invoices. Make a phone call. They make the phone call. They close that activity. You know, you can get the picture here. It kind of builds the workflow and walks them through what they need to do and when they need to do it. Okay? You may find that you can use an intern. You can use a secretary. You can use somebody that might have a couple hours a week to fulfill some of these duties without having to cost your organization any more money. Scoring customers. So this is an important one. And a lot of companies score their customers using, Dun & Bradstreet, credit reports, or they may just simply look at an aging and find out who's, notoriously late or what the balance is. We have a pretty interesting concept in the software we call cost of credit. If I'm extending net 30 terms to my customers and it's taking them longer to pay me, there's a cost associated with that. There's a hard cost because I'm having to borrow that money or finance that money. So what we allow you to do in software is to define an annual percentage rate for the cost of borrowing cash, typically between 6 and 9% for most businesses. We then multiply that times the amount that's past due, times the days that it's been past due, and we come up with a score called cost of credit. So it tells me, what is my customer costing me beyond our agreed upon credit terms? If I'm giving them net 30, I'm already planning on extending it for 30, but at 31, there's a hard cost there. And this is extremely important, especially for smaller businesses that have limited resources and cannot call everybody. Who am I going to call first? Is it the guy that has a balance that's 120 days past due? Maybe, but what if he only owes you $10? Is that the most important call you could be making? No. Cost of credit says, I might have a customer who owes me $10,000 and they're only 10 days past due, but that has a bigger impact to my bottom line. So that is my first phone call. And we can use the system to prioritize the calls that your collectors are making. Who are you calling, in what order, and why? Okay? Be proactive. This whole thing is about being proactive. We can't wait until we have a cash issue, a cash flow issue internally to try to collect. It might be too late. And I'm going to give you a scenario on this. Back in our younger days before we implemented Anytime Collect, we had a customer, a very good customer for many years. We're selling them products and services, and their AR kept creeping up and kept creeping up to the point where it got to the point where we actually had to call them and say, look, we're going to have to put you guys on credit hold. We don't want to do this because you keep ordering product from us. And we let the problem go too long. Not too much after we gave them that notice that we were going to put them on credit hold. We got a notice that they were closing their doors, selling off their assets, and we had to write off a pretty significant portion of our AR. Where if we'd have been proactive in collecting that, we would have had policies and procedures that put them on a hold prior, and we would have obviously avoided a very large bad debt write-off. Okay. Focus on key accounts. In most businesses, again, this applies even to small business, 80% of your revenue comes from 20% of your accounts. It's the Pareto principle. So why worry about focusing on, if you have limited resources, why focus on 100% of your customers. Let's look at the top 20% of our customers and assign them to somebody that owns that relationship, can build that relationship with the payables person at that organization, can understand why they're not paying, can understand their internal procedures, improve that. If we can improve that, we're going to get a huge increase and improvement in our accounts receivable collectability. And the other 80%, quite honestly, if you don't have the resources, it's not going to be that big of an impact to your bottom line. You can worry about that later. Automating the business process. Again, when I was doing collections, I had to send one email out at a time over and over again. There's no need for that. We can automate that. We can do mail merge stunning letters. We can send them out. You can review them before you send them out. And I could send literally thousands of emails to my customers based on workflow and alerts that I've predefined in a matter of seconds. Then what am I going to focus my time on? It's going to be on my phone calls. And that's going to even get more improved because I don't have to go dig around 13 different systems to try to find the contact, my last communications, and the emails. I can go into one area. I can click on the account. I can find out what they owe. I can find out what's already been discussed. I can find out what's in dispute. And I have their contact information there, and I can go ahead and work on that collections opportunity. Securing your financial information. A lot of companies really want to tighten down access to their financials. And you really want, your AR clerk necessarily being in your accounting system. What if they leave the company? What if they leave with your entire customer list? There are ways to secure that information. We do have some of that capability within Anytime Collect, where you can define roles, who's responsible for what. If a sales rep wants to log in and see what's going on with their accounts, they can only see their accounts. They can't see every account in software and go off to another competitor and take your whole customer list with them, right? So it gets even more important if you're a large organization or if you're a subsidiary of a large organization and you have, Sarbanes-Oxley or other, financial compliance measures that you need to adhere to. All right, big one here. All right, so we have sales forces. Our sales forces out there, they own the account, right? They're the ones building the relationship, trying to sell the product or service. They're the ones that negotiated the terms, the policies, whatever, to make that sale. You sell it, customer doesn't pay. Now you have somebody internally that's maybe, again, an AR clerk trying to collect on that. They have no relationship with this person at this organization. They don't have any of the background. Involve your sales team in your credit and collections process. If I'm out selling something and my collection rep contacts me as a sales rep and says, hey, that deal you sold last month, we never got paid. I could say, you know what, I'm going back out there next week to talk to them. I'll make mention of it, and in fact, I'll lean on them a little bit and say, look, I can't put your order through until you pay me on what you bought last month. So this is a very effective way to reduce your AR without adding any headcount. In fact, we've seen a lot of our customers implementing something a little bit more dramatic. Instead of commissioning your sales reps on what they've sold and what you've invoiced, wait till you've received payment. That puts the burden on the sales rep to go back after those customers that they've sold that haven't paid. Pretty novel idea. Escalation. You will end up with situations that need to be escalated, right? So I'm a collection rep, I'm on the phone with the customer, and they say, you know what, we have no intention of paying you. I need to escalate that, right? I'm just a collection rep. I'm going to maybe escalate that to my CFO, my credit manager, maybe the CEO who has a relationship with the customer. So I need a way to be able to move stuff from my queue to somebody else's queue that they can see all my notes and all the history and work on that. We can actually, with the workflow in the software, we can set it up so that, an invoice that's over 60 days past due, for example, automatically gets escalated to a credit manager or a CFO. An invoice that's over 30 days past due and over $10,000 past due automatically gets escalated to somebody else. So we can do a lot of this in the software. Work as a team. Again, we talked about considering assigning key accounts to different people, manage smaller accounts as a team. We've seen our customers do this, right? So we got the 80-20 rule. 20% of our customers are basically represent 80% of our revenues. If we have 2 people doing collections, and I have 100 customers, that means I've got 20 customers that represent 80% of my business. I take 10 of them, my associate takes the other 10, and we leave the other 80 in a queue that we work on together as a team as time provides. We can offload smaller activities to underutilized resources, an office manager, an intern. And what we're going to do is minimize those risks, right? We're going to encourage the teamwork, the open exchange of dialogue, and we're going to incorporate our finance, our sales departments in this process. So those are 17 ways that you can reduce accounts receivable. Some of those you can do without our software, and I highly encourage you to take a look at them because, again, you're going to get some significant improvements in your business. I do also encourage you to take a look at the application. I have some links here for some additional resources. We have an ROI calculator on the website. If you want to go in and find out what kind of return could you get by utilizing a product like Anytime Collect, you can put in your annual sales. You can put in your write-offs or write-off percentages. It'll calculate your DSO. You put in the number of people that you would need to manage collections, and it'll tell you whether you'll save money with our application or not, and if so, how long would it take you to realize that return on investment.